When people think about investing, they usually ask, what should I own? Stocks, bonds, real estate, cash? But one of the most overlooked parts of financial planning isn't what you own, but where you own it. I'm Caleb Sturgis with Clarity Wealth, and this is today's Friday Fireside Chat. Most people have money spread across different types of accounts: IRAs, Roth IRAs, 401ks, brokerage accounts, maybe even trust accounts. And while it's important to build the right portfolio, it's equally important to think about which investments belong in which. This is called asset location, and it can improve your after-tax returns without changing your overall investment strategy. Let's say you own bonds. If those bonds are in a taxable brokerage account, the interest they generate is taxed each year. To avoid that, many investors buy municipal bonds because the interest is often exempt from federal income taxes. But municipal bonds usually pay a lower yield than comparable taxable bonds. Now imagine you held those higher yielding taxable bonds inside your IRA or 401k, where the interest isn't taxed each year, and because the account is already tax deferred. Instead, your taxable account could be invested in assets that are generally more tax efficient, like broad stock market index funds that tend to generate qualified dividends and lower turnover. You haven't changed your overall allocation. You still own the same mix of stocks and bonds. You simply place them in accounts where they may be more tax efficient. It's a subtle change, but over decades, small improvements like this can compound into meaningful dollars. At the end of the day, good planning isn't just about picking investments. It's about coordinating investments, taxes, retirement accounts, and your long-term goals so they all work together. Again, as always, thank you for joining me on today's Friday Fireside Chat.